This is non-stop techno music radio. I hope it's copyright free. That's why I went with it. A lot of the other copyright free music is either too lo-fi, and I don't know, like too late night lo-fi, or just complete garbage. So it's tough to find good non-copyright music. Not to say anything negative about people that haven't copyrighted their music yet and are new and aspiring artists. If I could, I would have Tool on the background. I should really just reach out to Maynard and be like, hey man, huge fan since I was a kid. You mind if I have the rights to your music for my stream? It might go over well. He does share the same name as a famous economist, or very similar to it. Anyway, sound is good. Give me a quick sound check. Quick sound check, and we'll be good to go. Can you guys hear the background music? You can, right? Because the last stream, I don't know if there was background music in the beginning of it. I thought there was, but unbeknownst to me, for some reason, it wasn't playing when I watched the stream again. I don't normally watch my streams, but sometimes just to make sure that I recorded it properly and in 1080 and the sound was good. Anyway, you could barely hear me. Sounds good now? Cool. All right. Okay. First and foremost, shout out to my friends at Bybit. For those of you that have watched the last two streams, you know that I have officially partnered with Bybit. This means nothing about Phemex. It's not like anything bad happened with Phemex. I just think that it is the right decision for me. I think from a liquidity standpoint, from an instrument standpoint, I've traded on Bybit for a really long time, remained close with Ben, have always thought very highly of the exchange. So now this stream is powered by Bybit. If you use that link, Trade Bybit, that is my vanity link. If you use that link, you have access to reduced trading fees depending on your size. Reach out to me. Otherwise, you get the standard sign-on bonus, with exception that Bybit actually gives you a sign-on bonus if you deposit only $500. So some exchanges you need to deposit like $10,000, $20,000. They offer bonuses that are tiered based on how much you do deposit and how much you do trade. So if you're upwards of like 200K, I think you get a 30K bonus. But for the most part, I think that it's a phenomenal exchange. As I mentioned that I mentioned that they offer options during the last few streams. So for those of you that are unfamiliar with the crypto landscape, I don't imagine this is the case for anyone, honestly. I don't know why I talk during the stream like someone's watching for the first time and just stepping into crypto for the first time. They offer futures, spot, and options as well. So I think that that's nice to have all in one venue. Anyway, check them out. Hold them in high regard. Always have. Again, if you trade on Phemex, this doesn't mean that there is anything wrong with Phemex. Just a personal decision on my part. Anyway, let's get into it. It should go without saying, whatever I talk about during the stream is just my opinion. That's it. My opinion only. Not financial advice, strictly for entertainment purposes only. If you're not subscribed, make sure that you hit the subscribe button, hit the like button, all that. I do appreciate the engagement. I am trying to grow the YouTube again. I'm going to be spending more time on streams again. I've consistently come on every week now, and I'll be going back to doing it 2 times a week, maybe 3 times a week. It depends. I'm a new dad, so I am, adapting to being a new dad and what that entails. It definitely brings a lot of joy to my life, but it obviously does create some predicaments in terms of scheduling. Okay, so we're going to go over BTC. We're going to go over ETH, talk a little bit about legacy. This morning, really shitty, honestly. See if you guys can see. This morning I was trading, and I was trading the NQ and I was trading the MNQ, and my internet decided to cut out. So I captured 13 3/4 points in the NQ to start the morning. It was a good morning. And then my internet cut out. And my internet cut out because my internet service provider did not store my payment method. So a while back, I had lost one of my cards, and I canceled it, and they shut my internet off. Like, I don't think it was really with any warning. They just shut my internet off out of nowhere. And I had to call and obviously change the payment method, and they never stored it. So again, this morning, out of nowhere, everything stopped working, and I couldn't get it back on. And I'm thankful that while that happened, I didn't have any positions on. That would have really sucked because you can't access. So when I'm trading legacy and I'm trading index futures, I can't access Sierra charts to close out positions from my phone. It's not like crypto. So that could have been pretty bad. Thankfully, when I trade legacy, I always have stops on. Whereas with crypto, I won't always have stops on. All right. A few things. Not to go over prior streams too much, but I had mentioned on Twitter, I had mentioned during the stream that contextually, this was probably the best area you were going to get to not only hedge, but to actually outright short. So from a contextual risk reward standpoint, this 25K, 24K region was the most significant line or area on the chart in quite some time. The last most significant area on the chart was sort of this 20 to 21K level. So the prior highs before the whole FTX bonanza. So overcoming them, retesting them, very significant SR flip. But the most important level prior to that, sort of, most important level for, I think, what was this? What are we on now? I mean, it was 9 months back, but 1, 2, 3, 4, 5. So over a quarter. Over a quarter long high time frame resistance, again, between like 24, 25. And I say between because depending on whether or not you're looking at the weekly, the monthly, the daily, obviously you're going to get different closing values. ETH, BTC, the S&P, all still stuck within, for the most part, a very large monthly range. So if we're looking at the S&P, it's, I think, 9 months long now. So if we go to the ES, or within, 9 month long range. So that 42 level, I think, is really important. It's not just, I think, 41, 37, which is the initial high of that monthly, if we consider this a monthly range of 9 months now, not able to close outside of this significantly besides September. The high of that structure is 41.31. I think for all intents and purposes, though, 42. Putting 42 behind us, finding support above there, I've reiterated this multiple times now. I think that puts a lot of pressure on long-only asset managers right now that are kind of sitting out and very uncertain, because at that point, there's a good amount of career risk in not being in this trend if we do break out of it. But as you can see, we've had a very troubling. It's been very troubling for all markets to break outside of the range that they've been in terms of equity benchmarks, index futures, whatever you're looking at, crypto, BTC, ETH, yada yada yada. So I'm talking about the monthly right now because I said on February 24th, I guess, if we fail to close through this monthly high, so if we have this kind of, which we ultimately ended up having, have this close of February that was not through that level and close, I guess this is called a doji, then I would consider placing outright shorts. So not only hedging, so I mentioned I want to hedge as close as possible to this level, but potentially open up shorts. And I actually didn't short BTC. I shorted ETH, and I still have a short on ETH open from 1642 actually. I took a quarter of it off. But the idea is this level is an extremely obvious level, right? It's an obvious level in that the potential to trap a lot of breakout longers through here was on the table, right? Most important contextual level on the chart, if we're above there, finding support above there, there's really not a whole lot of resistance until we get upwards of 28.30. So flow through there, that would possibly be the first time around, especially the first time around, a really obvious trap setup in the making, or have the potential to be a really obvious trap setup. And that happened, right? So failure through the level, no major commitment through the level. If we look at it on the weekly chart as well, we did not get a higher weekly close through that level. If we look at it on the daily, we did get a couple daily closes above that level, but again, major loss of momentum at a really obvious level. And again, from a contextual risk reward standpoint, not a bad short. And why is that? I mean, regardless of how you place your stop, go to a cleaner chart. Regardless of how you define your position or place a stop, whether it was even getting involved around 24, your invalidation is really close. Right? Invalidation is really close compared to the first target. You still have like a 2-to-1 trade, even if your stop is above 25 and you entered in at 24. So the break of this first range, we'll get into that in a second. So your invalidation is right there, right? You're as close as possible. You're not as close because you could have got involved closer. I didn't get involved as close as I wanted. But if we're above 25, if you're finding support above there, it's really kind of a no-brainer at that point. And I think especially at this point, if the market is able to more or less, like let's say we based out here, find support, and now we're grinding above this level, and then you have some kind of press through 25 that is not immediately rejected, well, then it's very clear that being short is the wrong idea, at least in the near term. So I'm not patting myself on the back at all, but momentum was drying up, and legacy was showing a significant amount of weakness that wasn't necessarily translating or translated by BTC. And one thing that I kept reiterating was that you get some, I forgot what I said. I think I said a generous lag, right? Something I say often. It's a lag. It's never a sign of strength. So when equities rolled over, right? So if we place just a ES chart over this, when equity started rolling over sooner or earlier, right here, and BTC was holding up, there were a good amount of people on the timeline that were saying, oh, well, Bitcoin is just showing a ton of strength because it's stronger and it's bottomed, and it's decorrelated or decoupled, and that's never the case. If you think about it, it kind of makes sense why that might happen, or the potential is there. You have people that are devout in crypto, and you have really not many price insensitive sellers. So it's not like you have the same flows that are in legacy. that you don't even have the same algo response necessarily. You don't have the same responsiveness to a ton of factors in crypto. It is way more disconnected. So the potential for it to stay lifted a little longer and not respond to any kind of macro change, it's always there. And I think we've seen it many times before. So this is, it would be the exception to the rule if suddenly this was showing some kind of strength in the face of legacy and held up. All right, so that brings us to where we are now. In terms of, so my opinion is honestly that, so I'll stick with BTC first. My opinion is that we're going to be moving lower. I don't know how low, right? We talk about the yearly open all the way down here, but I do know that if you look at the monthly charts, just look at this monthly close. If we look at ETH as well, I think there is a lot more that can be captured to the downside than there is right here to the top side. I think that this kind of failure at this level on the high time frame, while markets have lost momentum, and while there's really not a whole lot of reason for crypto to go up right now, there's not really any retail that's getting involved. I think this kind of move and this kind of loss of momentum translates to a larger move down. I think mean reversion, much grander than this, makes sense. And there really is no retail right now. I mean, to be honest, why would any retail want to get involved? You know, if you're in crypto right now, it makes sense if you have some level of confidence, right? You've been through this before. You know what happens at bottoms. I still think the bottom is in. But if you're retail on the outside and you're looking at this market, everything that's coming out right now is some kind of FUD. It's some kind of attack by the SEC, some kind of, rhetoric by the SEC, even if it's not any kind of outright, actions against crypto protocols and whatnot. But there's a ton of negative rhetoric. There's a ton of uncertainty. Binance is in the news for some poor reason the last few weeks, honestly. I was going to say the last few days, but it is the last few weeks. So I think Runner put it great. He said, what could hurt you in March? And it's regulators, Binance FUD, Silvergate, stablecoin FUD, Mt. Gox claims, ETH Shanghai. So, we're probably more familiar with Mt. Gox claims, ETH Shanghai, more familiar with how CPI and how FOMC might affect the market. But outside retail, they're definitely aware of the FUD that's taking place internally, the internal obvious FUD. So this move was, we have a much larger mean version that took place. Markets were pretty flatlined. There's a good amount of shorts that were squeezed out. And there's no real follow-through momentum because we're not pulling in any new capital. Really, this is all a redeployment by money that was just sitting on the sidelines. So because of that, I think the most obvious level that I want to see price interact with and see what kind of response we have is at this low. So at that, it is 21,354 if you're on Binance, but at this swing low, I think the chances are quite significant that we take out this low. And I think that's probably, 20K is probably I would say probably 20K is the make or break level. But I think there's a very significant chance that we trade much lower. It's not much lower. I said much lower last night. But for BTC, it's another 5% drop. I think alts obviously are going to trade much lower. But I don't think that this is necessarily done. I think that after this kind of failure on the high time frame, after you have a high time frame move up, the market's going to move slowly back in the opposite direction. I don't know if it's going to just roll over right here. But I think that at a minimum, you could target this low. So it's kind of that you're looking at between, 21.5 down to, reasonably down to 20K. If there's no major response there, I think that that's probably one of the best levels to look at whether or not sellers really get offside. If there's no major response here, the chances are we're just going to fill out this structure. And honestly, if this was any earlier in this downtrend, so by any earlier, I mean, prior to being, was it 75% off the highs, however far we've dropped, this kind of structure, I would honestly be targeting, if we look at the high to the low, at a minimum 20,000. You know, that 20,000 zone. It's 20,500 if you do the 50% retracement. But more often than not, if I look at this on the low time frame, if I look at this intraday, this yearly open just kind of bugs me, right? So more often than not, a move like this that swing fails this high, this setup a lot of times, yeah, it does bounce around the 50 point, but a lot of times it completes and comes all the way back down to the range low. And I don't think that that's, I don't think that that's out of the question. I think that that would actually be pretty reasonable if the market chopped around but ended up revisiting this low. And if you've been watching the streams, you've been following along on Twitter, I've been talking about it for a long time, that the market has probably bottomed. I'm very confident that the market has bottomed. 95%, with 95% certainty, we'll say, conviction rather. But that doesn't mean that we can't revisit the bottom multiple times. So I think that we're just going to go into a period of ranging, right? I don't see any kind of real catalyst as to why crypto would really begin to outperform unless we're looking at an S&P that was above 4,200 and, the coast was clear there. But as it goes, the S&P is still stuck within a very high time frame range. We have a bounce after this rejection so far, but I think that this will be really telling whether or not we could clear this high again, because this high happens to be, again, above the 200-day, outside this diagonal, and now we'd be back at that monthly level. So that monthly highest close, again, for the last 9 months was 41.30 something. So if we have this rejection here, then yeah, maybe we are beginning to, as I said during the last stream, maybe we're beginning to, start this sort of upward ascent that, the entire prior bull market was built off of. The entire bull market for the last 10, 20 years, minus a few crashes in between, and not necessarily crashes, but it's just the S&P. It puts in very large mean reversions that a lot of people bet against, but it just continues on this sort of handicap ramp upward. So absent, though, the S&P doing something like that, so clearing 4,200, I think that it's just more likely that BTC fills out a larger range. So I think first order of business that I'd be looking at is around 21K, 20K. I think that that's really reasonable given that, we've had this kind of monthly rejection, right? If I look at this again, if this is a 5-minute structure, if it's a 30-minute structure, I'm targeting these lows. And I honestly, the high time frame has more inertia than the low time frame. So I think that given we've turned, I think that while it might take a little bit of time, I think you could kind of keep that on the table. So low time frame, one sec. So just to go over a couple things. ETH, BTC, one sec. Get back to my low time frame chart. So there was two ranges we were dealing within the last few weeks. Hold on. Composite up here. All right, so this move right here filled back that prior composite, and now we're tapping on this multi-day composite right around 22. So if this support fails, you're going to target right away, target 21.5, 21.4, target these lows. This support right now is not that confidence inspiring. And one of the reasons is we've actually bounced in equities. So we bounced in equities, or rather equities bounced, excuse me. And there's no real response by BTC. So one of the things that I noticed yesterday was there was someone that was T-WAPing a pretty decent short position. And then this sell-off was actually triggered by a sizable spot sell on Binance. So it's almost like someone knew that something is coming, or someone knows that something is coming. And I don't want to speculate too much. Filled a short and then dumped their spot inventory. So being that there's no real response yet, and this sell was kind of oddly out of the blue, even though the market had lost momentum, saying that crypto is lagging equity weakness. Even though that happened, the abruptness and the sort of violence of this move was kind of odd, because if the market was going to go into a period of chopping, there would have been way better ways to get rid of this positioning rather than just dump that spot positioning and incur all that slippage. So, the one thing that I'm cautious about is that this is someone that might be informed, right? That maybe something is coming out, maybe some kind of SEC release, maybe something with respect to CZ. I don't know. But there is something that stands out as being kind of weird about this sell-off, right? Of course, plenty of stops are ran. This was a significant wipe in open interest. That's way too crazy looking with all those liquidations or the wrecked chart. Hold on one second. But there was just something that stands out as not being, your normal price action for a move, or rather a move like this not being really what I would consider normal price action within the last few months. Kind of very abrupt. Not to say we haven't had abrupt movements like that before. So in terms of what I'm looking at right now, I'm still short ETH. This is basically your classic double distribution setup. So from 22.5, right, basically all the way up, you have a brief period of value being established around 22.8. This was hovering at these lows before finally dumping further. But from 22.5 up, it's pretty much an air pocket. So again, completely unchallenged positioning. If anyone is open short and is sold into this, they're still in good positioning. So if we're able to trade back above 22.5, honestly, even though I'm saying that I think prices are kind of going to come lower, and that we've seen weakness, et cetera, if we're able to trade above 22.5, one sec, I think it'd be really easy for this market to cover this entire gap again. So you can see you have a gap between 22.5 or 22.5, all the way up to at least 22.8. But we've seen many times before how when this happens, so when you leave an air pocket like that actually dollies kind of begin like this. So I was in a chat earlier, and one of the things I mentioned was, I think we're looking at lower prices, but I wouldn't be surprised if this dollied, right? If this big sell-off was filled out, because honestly, it wouldn't take a whole lot. This is a very imbalanced structure. There's really not a whole lot in the way. So if we accept above 22.5, and this is going to be pretty important, because if we see that 22.5 breaks, so we're at 22.4 right now, right? If we break above 22.5 and we don't see any kind of immediate rejection, so if the market's able to base above that and we see sellers come in, and price is able to remain firm, then I think it actually might be a decent long setup. Back to the origin of this move. It could move pretty quickly. I would say at least to, 22.8, maybe even 2300. Pretty obvious round number. But that's if we get that's if I have dry mouth today. That's if we I ordered a bunch of new cold brews, and I haven't really eaten much besides oatmeal really early. If we get a move through 22.5 that shows that there's no immediate sign of rejection. If we get a move through 22.5 and you see the longs get trapped in the pocket, and then we quickly fall back within this range, I think that I think it makes sense, honestly, for us to take out this low again. So failure above 22.5 after some kind of effort above, and then reacceptance back into this range. I think that you're going to target this low. I think ultimately, no matter what, I think that even if this is going to bounce, I think that these lows kind of stand out as being an obvious target to take. Now, alts across the board are getting hammered. I'll go over them in a second because there's something that I do want to point out. But I kind of started the stream off. I had a train of thought, and then I tried to remember it, and I felt a little bit lost since the beginning because there was something I wanted to say, and just started, and hold on. All right, we'll just go to ETH. ETH structure, a little bit different than BTC. So if we look at ETH and BTC, while BTC had one composite, pullback, higher composite, so we established value a little bit higher, ETH hasn't really left this entire region, right? So instead of forming one composite, and then forming a composite higher. It looks like most of the value with ETH has been established in the same exact area. And if you look at, this is just the weekly profiles, right? You see a ton of value overlap. So almost entirely the whole thing, right? Value being between, established between 1671 and 1540. So this is a really tight range. Because of that, right, a move back towards this low, acceptance back under towards this low, so acceptance back below 15, acceptance above 17, I think is something you just don't want to fade. I think that if you're going to spend this amount of time, going on 2 months now, inside of this tight range, and it's much tighter than BTC, in that there was no migration at all. If you accept to the upside or accept through, there's a pretty imbalanced structure that could be cleaned up to the downside. And, you know, if we're in a position where ETH is accepted higher, you know, chances are the BTC has moved much higher as well. And then both of them are looking for continuation upward. But obviously, I don't think that that's necessarily the case. So to reiterate, high time frame, I think that this is something that has not finished moving down. I think that we're going to be taking out this low. Do we get some kind of bounce here? I don't know. Remains to be seen. I'll pay attention to that 22.5 level for some kind of mean reversion up, because this, you know, truth be told, this is a very imbalanced structure. There wasn't a whole lot of that took place on the way down in terms of two-way trade. You know, just as kind of a rule, a lot of times when we re-accept into this, after creating them, you know, you clean them up, you fill them out. It's also, you know, 22.5 happens to be an area, or this region happens to be the area you look for the cutoff to occur, right? So you look for the failure to occur, you look for shorts to re-add, and so forth. So we're kind of at a crucial level right now. After a breakdown, it's not always that you get a really clean structure like this. You know, sometimes, or a lot of times, you have a structure that's already done a good amount of chopping, whereas this is still really tightly confined. So triggers are close. I would just be careful chasing for the gap cover, because I think it's more likely you get the failure and then further breakdown. What was I going to say? So lower targets. Again, I think that ultimately the lows of this structure make sense. If we look at where we're interacting with right now, got that naked POC, but we're just back at this 4-day composite. So it's between, say, right around 22 and 21.6. So 22, what the hell is that? And 21.6 region. So if that goes, we're in trouble, right? Then we're looking at least down to 20. And 20 is kind of, you know, it's a standout number, right? In terms of levels from a psychology standpoint, I think 20K is really important. But because of that, is an area where you could get some kind of major trap setup. Although I don't know if, you know, it doesn't really seem that way right now, honestly. I mean, if we look at, again, like, why would crypto continue to move up right now? It's not, the conditions aren't really primed for that, right? And as Runner said, there's a lot of headwinds. So it's entirely possible that the structure has just died, right? And has lost buyers. If you look at alts, it's not like we've even seen major capitulation in alts yet. So just looking across the board, this is Leva to us. Funding for the intervals have already changed, but earlier this morning fundings were negative, but a lot of that was due to the disconnect from a really thin sell-off. So alts sold pretty heavily, obviously, way more heavily than BTC and ETH, and because of that, the perps in the spot markets were very disconnected. Funding is obviously going to go negative in the short term, but almost all of that was on a negative change in open interest. So just longs being flushed out. But right away, so right after that happened, so you look at the next funding rate or the next funding interval coming up, And most of them started going back into positive territory. The only ones that are really negative, and if you look at them, let's say, where to go? So annualized on Binance. The only ones that are really negative, I think, were OP and APT. So let me just double check that. I think it was like 29% annualized or something like that. APT is now 20% negative, and OP is 23. So these are still, there's still quite a lot of sell pressure on these. And the open interest change was not that dramatic compared to some alts. So again, there's already a good amount of shorts that are positioned, more than likely a good amount of shorts that are positioned in these pairs. You know, I shorted APT yesterday. I closed it out for a scalp, but OP as well. So went into new price discovery above an you know, prior all-time high, and then just completely died. So in terms of, you know, this looks bullish, right? Because, you know, it's, again, new price discovery at a level that had not traded before, a ton of potential. I talked about the psychology of this before. But if the rest of the market is going to pull back, you know, what is better than selling? What is better than selling the current all-time high or as close as possible to it? If alts are going to have, you know, a more sustained pullback. So big if. I'm actually short right now, AJAX and FET. So we'll go over those in a second. I'm just trying to think. There was something I wanted to touch on. You know, some streams I know I start off well, and then others I'm like, fuck, I lose something right away because I don't write things down. Just give me a second. That website is Levitas. Yeah, and feel free to ask questions in the chat, because while I'm thinking about a point that I wanted to make that has left me. So honestly, so we talk about that 22.5 level, that gap. There is really not a lot of, so if we just look at open interest right now, open interest moving up, right? Initially on negative funding, but funding flipped positive. One sec. There you go. Just want to zoom out a little bit. There's really, it doesn't really look like we have any kind of major trap of shorts yet. And I still think that you get something like that lower. It just looks like we wiped out a bunch of longs, and maybe one larger counterparty was in the know of something. This is all speculation, because that spot dump was really odd. But I would want to see that, you know, price kind of moves sideways at some period or takes out a low, and we have some kind of major buildup in open interest, followed by fundings going more negative than, you know, what they look to be right now, which is briefly negative but back in positive territory. So I'd rather see something like that sustained. It looks like you might have had some initial spot buyback down here, right? Some kind of liquidation purchase, right? A ton of liquidations. You know, buying the liquidations, selling the liquidations is often good. But it's easy, you know, it's entirely possible we start to see that begin to turn as well. And this structure just looks weak. So we have a larger roll. Fuck, what was I going to say? There's something, I'm still trying to like find my thought. Listen, this could be anything, right? So someone's saying this could be the pullback before 30K. That's completely fine. And that's why I think it was as good. It was a great idea to get involved as close as possible to 25. You know, I don't honestly care. So I have no qualms about BTC moving much lower or much higher. It doesn't bother me. I just want to place the you know, most actionable, least painless trades. So as close as possible to you know, to the best invalidation. So if we're at 25K and we're sitting above it, then I'm just going to join the long side, right? And there's no, I have nothing against that happening at this point. I just don't think that it's going to happen in the near future. I think it's more likely that we get some kind of throwback, but then this has a larger pullback either way. Unless, like I said, we're back to, I think in the beginning of the year, it was easier for us to be decorrelated from, or, you know, brief periods of decorrelation from the S&P. You know, crypto was running, but I think we flushed all that now, and we're back to being more correlated to the S&P, to the downside. So I don't know. We have to, S&P has to get above 42. Otherwise, this kind of weakness with an S&P that continues to move lower, like let's say that, we're getting some mean reversion right now, which is entirely expected, right? After this kind of pullback, this is probably like right around the 0.5 fib. After this pullback, it's close to it. There's probably another fib on there that someone would say they use, but I don't have on there. After this pullback, it's pretty normal to have some kind of throwback. But again, it's going to really matter whether or not we're able to get back above that monthly level. I think that is the most important area on the chart. So I'll just put it on here so you can see it. So we haven't been able to do anything outside of there. So yeah, it's kind of a tall task, I think. Any failure within this region that continues to chop, move down, or move sideways, I think that doesn't bode well for BTC. And again, we're going into March, where we do have an FOMC, we have a CPI. Yeah, I totally get it. I get being, seeing a series of higher lows, and something I mentioned this in a chat this morning. Even though I think that BTC sees lower prices, I don't want to lose the plot big picture, because I think that we are closest to the best location big picture. So however you cut it, like if you're not a great trader, should you really look for a ton of short opportunities? I mean, if you look at BTC, it could drop another 20-something% before it's back at the bottom, and I think that this is the bottom. And then even like more reasonable, even from here, right? If you didn't get involved closer, like I said, I'm short ETH from 1642 or 1641. So honestly, my short looks like I sold this level. Like I was sharing the image this morning of the short, the line right here, but I had actually sold earlier. So I'd sold thinking they were going to catch up to equities. But I do get, like, big picture, again, how much are you going to get in terms on the short side? Yeah, can things just change drastically? Absolutely. But reasonable, right? Downside from here. Like even say it breaks down more from here. There's not really a whole lot of meat on the bone short-wise. I do think, though, however, with alts there is. I do think with alts there definitely is. I think that a lot of alts have just completely blown out in terms of valuations for no other reason than squeezes and capital redeployed. But I don't think there's anything to sustain a continuous rally. And it's kind of funny because if we look at global charts on something like Coinalyze, and then we look at what's happened in the past before major sell-offs, it's not exactly precise, but when dominance by open interest between others and BTC begins to close, so when others, meaning alts, rises and BTC begins to drop, it's usually close to the end of a move. And if you look at how dominance by volume changed as well, you have a big alt rally. That's going down as that is, that window is closing. So more specifically, including that dominance by open interest. The last time that happened was going back to, what was this? May, majorly going back to May 21 for a large sell-off. That happened last year as well. Just this sort of pattern of large spikes, volume coming out, and then more specifically, that open interest between alts and BTC coming to sort of a pinch point. Now, it's not like a fine science, though, obviously, right? But it is indicating that they're getting a little heavy, obviously. So, you don't have to look at something like this. If you just looked at like the timeline for the last month, you would have thought we were in a new bull market. That's why I kept saying, like, make no mistake, this move's going to have an end. We're not beginning the up-only ascent to a new all-time high. So I'm actually, like I said, I'm short FET and I'm short AJAX. So I talked about this the other day, and I said, and this should give you an idea of how fast I could change my mind. I talked about FET looking like the most obvious accumulation pattern upward, and I forgot we were right up here. So this is when things were still looking decent. BTC was still bid and supportive. And this was one of the only alts that had sort of this upward grind, and it was actually right here. This was 3 days ago. One of the only alts that was still kind of forcing its way into high time frame resistance. That being this weekly swing high going back to April 2022. So it looked like sort of the prototypical or the epitome of grinding against resistance. We had seen this pattern before with Fed. The AI narrative is pretty hot. I think that the AI narrative has potential in the future cycle. But obviously heated up for a bit, but this did not look like it was necessarily it was done. I thought this was going to put in at least one more leg. Now we've had a failure at this level. We've had a couple weekly closes below there. And I honestly think that it's very unlikely that after this kind of consolidation that we continue to push up with the rest of the market being heavy. So more importantly, in terms of context, with BTC and with ETH heavy as well. If you look at AJAX or Singularity, this one is probably as good as you're going to get. A monthly swing failure, and it's just barely above there. But again, from a contextual risk reward standpoint, if you could short as close as possible to this high, I think I am in a good position. So I filled half of a position, but I do have orders above because this is a pretty wide area for a stop. But I size a position accordingly, right? I'm not trading the same way if I had a 1% invalidation or a 5% invalidation. This is a pretty big range. So I had to take a small position outright and see if we could get some kind of throwback that I could sell into if it fails. Or if this continues to break down, if I could sell it on the way down. But either way, I think that these, with a market that is heavy across the board and looking at some headwinds, I think that the hot narratives have the highest potential to mean revert the hardest. Hopefully that makes sense. And again, big picture, this is going back now into December, I was mentioning this. This is not a level to get really bearish on the dollar. So that translates to, this is also a level to be really careful when you're in risk, right? Because a strong dollar for this regime, the last 2 years has meant a weak equity market or weak equities, or rather a punishment of risk assets. So equities and crypto. So if the dollar is going to bounce here, and we're seeing pretty constructive activity in the dollar, then that does not bode well for the S&P, and that does not bode well for crypto assets as well. Even though it's kind of, there have been brief periods where that seemed to not be the rule the last week. Give me 1 second, guys. I got to take a break because I have to use the bathroom. All right. I had to take a leak. Yeah, I don't know what to make of this right now. This it's not exactly exuding incredible signs of strength, even though, even though on this breakdown, like if you look at, this is Binance, you could make an argument for some level of absorption happening down here if this, delta is from shorts. But there's a lot of times where if we're not at a level, right? So if the market is not at a key level, the open interest increase is often sort of confirmation of the trend down now. So hopefully that makes sense for people that understand that it's bringing people in behind the trend. It's sort of like the same argument for volume coming in behind the trend, right? There's actual activity getting involved off the sidelines to short this, and it's not always the case that you should fade that. I think it's better to fade that when it's the case that is at a key level. But being this is the first sort of flag after a large, a pretty large breakdown, I would just be mindful of that. Now, it is tough to say that because a lot of times, like on Bybit and on Nance, when signals are that clear, in hindsight, we might be saying like, oh, that was such an obvious trap of shorts down here. But that's why, you're not just going off of one thing. That 22.5 level, like no matter what, I think that if the market is above 22.5, and again, this is just put the profile on, it's just an air pocket, right? There's really nothing that took place there. If we're above that high, I think that this is a really significant chance that this does dollies, puts in the Dalai Lama, right? So this level is the best level to look at flow, right? To see whether or not buyers are getting trapped, whether or not there's any kind of pickup in the bid as we cross that. Because I think more likely this is positioning, getting behind the move. I think that this is a legit, honest move, and I think that we probably, again, have further down to go. Whether it looks like this from here or has a spike up that fails, but I think that these lows have a target on them. And trust me, I am like mindful of one. I changed my mind very quickly, but I am mindful of prior. So there have been prior structures where we've actually, it's appeared like we should put in the full throwback, right? Where, okay, so you have a swing failure ultimately of this structure. The next target is here, but there have been times where if you have something that has put in some kind of value, pulled back, established value, and then you have sort of these two ranges, and then you have a marginally higher high. There have been a lot of times where the trap has actually occurred at sort of the top side of that prior value. So yeah, would that ultimately mean that, hey, maybe this is, if we do look at this structure, right? This is something I was thinking about for a while. I was actually thinking about this on and off when we were right here, because I'm looking at that, I'm looking at this, I'm thinking, well, same people getting involved, right? Same people, same market participants, absent the graveyard that occurred right here. But yeah, there should be some similarity to those fractals, right? Especially if it's local. So maybe this is going to do something, and I was talking about that third pop-up before failure. But we ended up breaking down first. I don't know. I'm completely open to any possibility. Just looking through the chat right now. So let's see. I don't know where you trade, Nick, but no matter where you trade, you still have to file your taxes. Oh, someone wrote that. Okay. Yeah, I mean, people who have used exchanges that they technically don't have access to, like people trading on BitMEX back in the day, like they all fired the taxes still. I mean, I feel like most people hopefully did. It's just a CSV, right? The exchange gets in trouble if you're on it, not you. But people who used a VPN, traded on those exchanges, you still have to file your taxes the same way. The IRS doesn't care, The IRS, what they do, post something recently talking about criminal activity, you still owe your taxes from criminal activity. So, and that's not criminal activity anyway. Or, I don't think it's criminal activity, but what do I know? Yeah, I have a phone hotspot, but I just, like I said, when it happened, I knew my position was already off anyway, so. Oh, the background music is kind of wearing you. I didn't realize it was still high. Sorry. No, so KG, it wasn't that. So when I looked at activity yesterday and I said it looked like someone was T-wopping, it's actually because it looked like there was a pretty, and this is a very basic T-wop. There are definitely way more sophisticated T-wops, but it looked like there was an interval that was taking place in this selling activity down here. So a pretty obvious cadence of selling, CVD down pretty smoothly, and a lot of times with the TWAP, you'll see a pretty gradual ascent of open interest as someone is building a large position, but with no major spikes. So no major pickups in open interest. Someone selling and a liquidity provider taking that inventory. So market makers taking that. Obviously people limit buying taking that. But it was just my opinion. It just looked like there was a pretty obvious cadence in the tape and in the activity that was taking place, rather with the order flow. So in the activity, paying attention to the order flow. Excuse me. Like I said, my brain is not working this morning. I had that new coffee, and damn, I was buzzing all morning. I'm looking through the chat right now. Just give me 1 second. We'll switch up the screen. Oh, never mind. Where did my... Oh, I turned it off because I didn't want to leave it open. See our charts. Really don't like how we have that huge wick when long liquidation is at all-time high. Someone is absorbing. Yeah, I mean there were a lot of longs that were liquidated. Yeah, I see that. I think like I said, I'm completely open. When I think we have a larger pullback over time, I'm looking at the high time frame chart. I'm looking at the weekly. I'm looking at the monthly chart. Does that mean anything? Does that mean that we can't continue to bounce within this level? Yeah, no, it doesn't. Obviously, it doesn't exclude that at all. So, because this is so clean, I think you have the benefit of this being so clean. We're so close to that 22.5 level, again, into that air pocket, and there's not really much that's going to get in the way. Yeah, this is not a tax advice channel. Yeah, always ask your accountant. I hate tax questions, by the way. I hate when people ask me, how should I do my taxes? I mean, you should just give your taxes to a professional, and you shouldn't do your own taxes, honestly. Like, if you're in crypto, I'm sorry, when I say I hate answering those questions, it's the idea that, one, there's not a Google, so just Google crypto tax. There's token tax, there's, what else is there? Like Coinly or crypto tax trade. There's a bunch of them. You just plug in all the exchanges. If you have an issue, just reach out to their customer support. Like an exchange doesn't hook up, and they'll take care of it. Elon, sending me my positions against me. That's all right. We're just back at entry. But yeah, I don't know, guys. Probably gonna wrap it up. Wanted to keep this pretty short. I had technical difficulties yesterday. I was supposed to stream the day before, but I had another tattoo appointment. So we'll get back to doing these more consistently. Today's Friday, so I'll hop on a stream again on Tuesday. So we'll do a stream on Tuesday. I don't know if there's anything I'm missing. I think that's it. Yeah, these are just algos responding to Elon. I don't know if I'd really worry too much about crypto suddenly doing something major with respect to AI and pumping out of this on its own. This is probably better to just add into, honestly. Anyway, gonna wrap it up, guys.